Welcome to Real Estate Real Talk with me, Skyleigh. I'm a realtor, coach, and founder of Forever Kamloops and Forever Florida Real Estate Groups and the creator of Elevation Real Estate, the realtor coaching platform. After nearly a decade in this industry, I've built a business that gives me more freedom, more income, and more time with the people I love. And now I'm here to help other realtors do the same. This podcast is for agents who want to build a thriving real estate business without burning out. We talk about scaling smart and building systems so you can buy back your life, because life shouldn't feel like all work and no play. And if you're a buyer or seller tuning in, consider this your backstage pass. You'll hear unfiltered conversations with top agents and industry pros, giving you the same insights we share behind closed doors. Knowledge is power, and the more you know, the better you can advocate for yourself and work with someone who truly has your back. Let's get real.
Okay, today we are sitting here with Brett Swarts. I'm assuming it's Swarts. I was going to say Schwartz, and I'm like, that's not right. I always add like a sh for some reason. Anyways, Brett Swarts, thank you so much for coming onto the podcast today. You are a best-selling author, and the book is Building a Capital Gains Tax Exit Plan, and you are the host of the Building It to Billions and Capital Gains Tax Solution podcast. We're going to have a really cool conversation today. I know that there's a lot of people in Canada that are going to be listening to this, but there are also a number of people that I know in the States, and I think that this information is just a really awesome opportunity for people to know no matter where you're living, considering the fact that we are able to invest in multiple different countries. Thank you so much, Brett, for coming on the podcast today. I cannot wait to hear all of the tips and tricks that you have for deferring capital gains. So can you actually just give me a little bit of background as to how you got into this? I feel like there's got to be a story there.
Yep. Thanks, Skyleigh. Grateful to be here. And yeah, started out in California. We call it Taxifornia these days. Growing up in the Bay Area mostly, and then Sacramento, building houses and investing in property. And then had a chance to play some college basketball, which was cool. And then had a chance to study and practice multifamily brokerage for my first career job, if you will, at a place called Marcus in Millichap. And that's when I learned the underwriting and the structuring and the investment real estate world of multifamily properties. And then things were going pretty good for a little while until the 2008 crash hit, and we saw friends, family, and clients lose half or all their wealth, mostly because they didn't have a great plan in place for capital gains tax, to be honest. For those who lost and did lots of 1031 exchanges, which you're probably familiar with, a lot of them overpaid for properties that they otherwise wouldn't have purchased because of the strict timelines. And so we got humbled really quick and said, wow, what could we have done differently had we known? And what was the big challenge? What was the challenge? Well, the challenge was not being able to get out of debt, not being able to diversify, not being able to have liquidity when the market was hot in 04 and 05 and 06, right? And so that's really the idea. Like our parents, Skyleigh, they taught us to sell high and buy low. That's the whole thought of this whole process. But if you have to sell and buy higher in the same marketplace via a 1031 exchange, that's not always your friend. And fast forward, my wife and I, we have 5 kids, and we at the beginning we had 1 kid, and we barely made it financially. We had to borrow actually $5,000 from my father to keep the lights on, moving my brother into a small condo. I always say that because people might be in the different parts of their journey right now, and financially we were flat on our backs. But those are the moments you have an opportunity to learn a lot. And so myself and a few others learned about how to basically eliminate the need for the 1031 exchange forever, never have to do it ever again. And, be able to sell and defer taxes in Bitcoin and businesses and real estate. At the time, it was mostly just real estate because Bitcoin wasn't as popular at that point. But now this is all we do. And by the way, it still works for Canadian citizens. If you own anything in the US, we have, in fact, one of the biggest transactions ever done for the structure we're going to talk about was for a Canadian citizen who owned a large skyrise downtown San Diego property that was sold for over $100 million and was able to defer the tax. In fact, there's more reason to know about this, especially if you own anything in the US as a Canadian citizen, than even for a US citizen, because Canadian citizens also don't have what's called much of an exemption, right, for the U.S. In fact, I think it's like $68,000. And then the U.S. government will take 40% on what's called a death tax. For an American citizen, you have up to 30 million married, 15 million single. And so it's actually even more valuable to learn about how to eliminate the estate tax, which we can also do as a non-U.S. citizen if you own assets inside of the U.S. And yeah, I think this will be a cool conversation for people to learn about, how to do all these things and how to make better decisions when they sell.
Yeah, no, this is it. It's so cool. And I feel like so many times people want to do something, but they just don't know where to start. And then they jump into something, what you had mentioned, but don't have the exit strategy in place. And then all of a sudden, everything that they grew, I just got taxed out the butt. And like now I have nothing left. So I think the more information that people have, and I love that information is more readily available now than it ever has been, which is amazing. So I didn't realize this, but you can actually defer with Bitcoin as well. Is there anything else that you can actually
Really, any asset of any kind that's subject to U.S. capital gains tax. So we've done Bitcoin, we've done public and private stock, we've done primary homes, luxury homes, we've done, of course, commercial real estate properties. It can be artwork and collectibles. It could be like a big private jet, or we've done it with other cryptocurrencies as well besides Bitcoin. So our key parameters is we like to see at least $1 million net proceeds, $1 million gain. We want to make sure it's big enough to mean the tax pain is big enough in order to set up a structure and do everything. But yeah, there's really nothing that can't be used for this. And we've even done it with some short-term income tax on some kind of like buying or holding land, but not closing on it and then flipping it. We've done that with it as well on some ordinary income tax. Again, if it's larger multi-million-dollar exits.
Wow. Yeah, no, honestly didn't realize that. And then something that I had heard too, I am not well versed in this, obviously being from Canada. Also, funny thing, you said what'd you say California is called for tax?
Taxifornia, yeah.
Taxifornia. I was going to say, they actually I'm from British Columbia, and they say that it stands for bring cash. But it's funny because we're like on the same side of the continent too. So I'm like, of course, everyone needs to bring money over here. But again, I'm not well versed in this, so you'll have to excuse me if I sound a little bit silly. But I had heard that in order for you to defer the capital gains tax, you actually have to buy again within a certain window of time, and the money has to be held in a trust, correct? Is that the
close?
So you're information?
Yeah, you're combining the 1031 exchange with our strategy, which is a trust with an installment sale.
Got it.
So the two separate tax codes. So the 1031, that is the downside, and the 1031 also only works for investment real estate. So it doesn't work for Bitcoin. It doesn't work for business sales. It doesn't work for primary home sales. It doesn't work for stock. It doesn't work for artwork. Ours works for everything, the strategy. So I like to call ours the Netflix version to the old Blockbuster. And really what people are looking to achieve, I found, Skyleigh, and it's the fourth quadrant of the Robert Kiyosaki book. It's that truly passive income.
Yeah,
and most never get there because they either they don't want to sell and pay the tax, or they sell and they put it into something that doesn't actually give them the cash flow they want or desire. Usually it's $20, $30, $40, $50,000 per month is the number. And ultimately, the amount can be harvested and invested into things that have excess cash flow. And that's really what we're trying to achieve for folks. It's like, how do you sell what you have to achieve what you really want? And most people want no more toilets, trash, termites, rent control, all of the nonsense that is right now with owning a lot of real estate in a lot of these larger states like a Taxifornia or New York or New Jersey, Illinois. And they have all of these gains, massive gains, but they can't harvest it. So their ROE, their return on equity, is very low. And they want what's called TPI, truly passive income, right? They want 20, 30, 40, 50, and they don't want to deal with all the nonsense that's deal with it. So that's really what we do. We build these plans, help people exit, and then they can invest into whatever they want. They can go back into investment real estate of their own if they want to, or passive into deals with partners and go into funds, go into the stock market, go into Bitcoin, go into really anything. They can get liquidity, they can pay off debt, but they never have to deal with, if they don't want to, any more of the toilets, trash, termites, and or if it's a business, like they're just ready to retire, right? And they want to be passive and diversify their wealth. Those are the big things that we focus like a laser on for folks. And there's about 124 trillion that's transferring. It's the biggest wealth transfer in history of the planet's happening right now, basically in the next 10 years. From the baby boomers to the next generations. And 50% of all wealth in America is tied to high-end primary homes, businesses, which is private equity, and commercial real estate, of which these are highly appreciated, right? Meaning they have massive tax if they sell without a plan in place. And every day about 10,000 baby boomers are turning 65 in the US alone. And there's about 80 million in the US alone. And so you see this huge wave. Imagine it's just going to crash. And the question is it going to be properly planned and accounted for through an exit plans that defer capital gains tax, eliminate estate tax? Or is it going to be the hands of the government, which I think we've all could agree, no matter if you're from Canada or from America, they don't spend it very well or very wisely or very much transparency.
Yeah, if people don't have their plans in place, you're right. Like a lot of the money from the boomers is definitely just going to evaporate into the government's hand, and there's ways around it for sure. So then we did talk a little bit about this before we jumped on the podcast, because I love investing in real estate, but you're right. There's some passivity to it, but then there's also a lot of work that's involved in like other portions, right? So the appreciation, cool. You end up having a bunch of money in your hand if the market goes up. However, like you said, there is managing the rental, finding tenants, making sure that it's being taken care of, all of that kind of stuff. So I had mentioned to you about considering investing in Section 8. When people want to invest and go back into real estate, does this still work for them? Or is that falling back into that 1031 exchange again that we're talking about?
No, you can absolutely invest back in real estate. In fact, we serve purpose-driven entrepreneurs who are still in this wealth building stage and not just being completely passive, although they can be. And most of them will be passive for a period of time, and then they'll buy when it makes sense. All tax deferred, never using a 1031 ever again. And this is the beauty. So I'll give you some actual deals. Okay, this one thing helps people. So we did a $13 million exit for a client. They built this car wash in San Diego, okay, and wildly successful. Bought the land for about $500,000. The car wash is like $3.5 million to totally build and get all ready up and running. So the basis is about $4 million, Skyleigh, and then the sales price is about 13. Okay. So we did this right before interest rates started to go up. And so we sensed and felt that we're probably at the height of the market at that point, and it wasn't a good time to buy, perfect time to sell. So we sold, paid off their debt, deferred their tax. We went a lot into liquid investments like money market accounts. We also went into semi-liquid debt fund accounts. So still real estate world, but on the debt side, tax deferred, which again, a 1031, you can't do that. You can't go into debt, real estate debt. You can't go into stocks. Like we went into stocks, we went into Bitcoin at 40,000 a coin, and we diversified. We dollar cost averaged. Why? Because the real estate equity market was really high at that point. And so what's happened now, we're about 3 plus, it's been about 3 years or so, right? The real estate market has shifted, and we've been buying deals at a discount, all tax deferred. And so their ultimate goal is to wait until the land values and the valuations drop so that they can buy land again and redevelop again, okay? But it takes time. So that's the key. This gives you the time to make great decisions, our strategy, because it's not a 1031 exchange. It's an installment sale with the trust. And so quickly how this works, they sold to the trust, and the trust sold it to the buyer. And the buyer took the property and they're gone. And then the Charles Schwab holds the funds typically, and they gave a promissory note. The trust is a promissory note back to these, there's 3 partners that used it. And each of them got for their portion a promissory. So they came to the bank. So they get an interest rate tied to the loan, typically around 8 to 10% is the interest rate. And then as they receive payments, they'll pay tax on what they receive. But in the meantime, the funds are diversified. Some are liquid, some are semi-liquid, and we're making great, smart decisions as best we can because we have time to make those decisions. And then so right now they're mostly passive, but they're going to turn around and be active once the deals come back. And so you can be an entrepreneur or you can be retired. You can be active or you can be passive. And so it's very nice to have that flexibility.
Okay, so then I'm assuming most people don't necessarily know that they can do all of this stuff. So where do people typically try and save on like capital gains and deferring taxes? Is that 1031 exchange the only place that you usually find people wanting to go before you're like, no, we have so many other options?
Yeah, good question. I call it the blockbuster methods. If you remember a blockbuster video, yeah. And 1031 is a blockbuster method. And then you have the Hollywood videos, like the local video stores. That's like a Delaware statutory trust. That's another form of a 1031 exchange. Then you have stuff like opportunity zones, which can be great, by the way, but there's hard to find those opportunities that are in those opportunity zones. You have some cost seg bonus depreciation that can be actually really great, especially if you own property. So I don't want to say that our strategy is the one size fits all. I would just say it's the most flexible, legal, proven strategy that typically solves the biggest thing that people are looking to solve, which is not only just capital gains tax, but also what they desire, which is the truly passive income. And we say that truly passive income is to your freedom and impact as compounding interest is to your money. And we believe that because if you actually read the Rich Dad Poor Dad book, that 4th quadrant is what most people are getting to. And you mentioned it before, like real estate can be semi-passive, but there typically is always something, right? And sometimes people don't know the water they're swimming in until they're out of it. And they're like, oh my gosh, I can't believe how much time and energy I really was spending on that. Like I thought it was just, but then you're 3-6 months away from it. You're like, whoa, that's a weight off my shoulders. That's like our client, Warren and Catherine, who had a multifamily property in Sacramento. That's exactly what happened for them. And we built a plan that freed up all of their time and energy and basically gave them a chance to focus on their family and travel. And that's the transformation why we increased their cash flow from 120,000 to 190. And so that difference is about 60% on the cash flow side of increase. But the big difference was their time went freed up. And so the time is the one commodity we can never get back, right? And so that's really the key. If you're listening, just like focusing on what matters to you the most in this season of life, and what do you feel called to do? And if it is Section 8, go for it. Serve that community to provide housing in a really meaningful way. If it is Airbnb, do it. If it is fix and flip, do it. If it's multifamily, go for it. There's no wrong answer, I think, for real estate. I just don't have having clients or anyone who's listening to feel like they have to do something in a given time when it doesn't necessarily make sense on the financial side of things. And so that's our focus is providing options for people and flexibility for people.
Yeah. And then, because you mentioned the 4 quadrants, and I think a lot of people get hung up on this as well. There's so many people that I meet, and I feel like you probably meet a lot of people like this too, where they're like, oh, I'm a business owner. But then when you like peek behind the curtain, I'm like, but it's not a business if you go on holiday and then it doesn't run anymore. That actually means that you're in the self-employed quadrant. But just because
Correct.
you have people working with you, people think it's a business. So I think people don't fully realize, like you said, the waters that they're swimming in until all of a sudden they aren't there because they're on holiday and like everything's falling apart. Or again, you're investing in real estate and then it destroys the house. And like you said, was the termites, toilets, and something else. So
trash and all the things. And to your point, passive income, I think, is not going far enough. That's why we coined the phrase, basically, truly passive income, because we've honestly, and I grew up in real estate. I love real estate. I love 1031 exchanges. I love investing. It's my whole world I grew up in. It's my number one place that I invest. But I love truly passive income more. Yeah. Okay.
Yeah, now then you can go back and put it back into like real estate or whatever that you want. Right?
Well, yeah, and you can do passively with the best operators in the world, right? And you can do it into debt right now. Like we've got debt deals, Skyleigh, they're paying 10, 16, I even paying over 20% right now. This is massive cash flow, and that changes transformation families, not just for their own freedom of their time and energy, but also to be able to make an impact, right? We call it for MVPs, right? The most vulnerable people. Like, how can you build a wealth and legacy in a way that unlocks capital, multiplies freedom and impact, and makes a difference for the most vulnerable people in this world? And you can show your family how to do that alongside of you versus clients that just get stuck in a property for 10, 20, 30, 40 years, never harvest the gains because of the tax, don't want a 1031 because of the pressure. Yeah. And their ROE is 3 to 5%. Like their return on equity is very low, meaning the opportunity cost of cash flow right now, that could be 2 and 3x that amount, can go make a difference for their community right now. You don't have to force the charity, but you can, or it can make a difference for your time and your energy. And so that's really the big thing for people. Like, what really matters to you the most right now? And how do you get there from where you're at? It might mean selling something. It might mean deferring the tax, and then building a team and a plan that helps to 2 and 3x your cash flow. If you can put those 2 things or 3 things in place, that's the transformation that changes families' lives. And that's part of what we're focused on for our clients and people that we serve.
I love the diversity of all of this too, because obviously people's portfolios they should be quite complex, having their eggs in multiple baskets, right? If you have all of your investments in one place, that's not ideal. So thinking about what you're saying, though, is that the people that you usually end up helping are the people who already have like this net worth that they can diversify. And it seems like there's a lot of people who are probably exiting the rental world and like the real estate investment world. I don't know about the States, but Canada's not as favorable for investing right now with all of the tax laws that just came into play. I think I mentioned to you that here in BC specifically, they implemented a flipping tax. So you can't own a home for less than 2 years without being taxed for that. They've limited Airbnbs to only being a portion of somebody's primary residence. You can't have it in like a secondary dwelling or like a apartment, anything like that. So there's just so many rules that are in place. It's like real estate's not as favorable for investing. There's a lot of people exiting here. Are you finding people exiting real estate investment in the States as well a lot, or?
It all depends. There's always people buying and selling real estate. I think it's still the best way to build wealth long term. But to your point, like the demographic of the baby boomers, we have found that every day that they get older, the less likely want to be active owners of properties. And the more that their time, the average life is 70 to 75 years old. And every day we all get older. And so at a certain point, you're like, is it worth the time and the energy and the effort into this property? And so do I have truly passive income? And so in that sense, yeah, I do see those that are, the older they get, the more likely they are to sell, and the more likely they are to want and need truly passive income. Now, the younger, let's just call it 50 and below, right? They're more likely to still be in the building and the entrepreneurial phase, which is cool, which is great. And I think that's where the opportunity lies, right? In between finding a buyer and finding a seller that can meet at an equitable price, given all the factors that you're talking about. But yeah, my personal strategy has always been, because of my family and where I'm at with my career, is to be passive, go with professional, best in class, multifamily, industrial, medical office, real estate debt, senior housing, diversify by sponsor and by product type and by geographical location. That's been my strategy, and say, hey, how do I double and triple down on my business and crush that, and then be able to take that and put it into passive real estate investments. But it's different for everybody, right? Your calling and your purpose could feel like you're going to serve a community by providing housing, which is great, right? And so I don't think it's a one size fits all. I think you got to get really clear on your calling for where you're at in your life.
I know that we only have 25, 30 minutes. There's just so much information that I don't want to leave people more confused than when they started listening to us today. But there's just so many options. And I think what you're mentioning about people just having a plan and like considering all the different aspects and like talking to a professional so that they can actually create a plan around what's important to them is the major takeaway from this conversation today. And I'm going to be a lender in my next life. That's what I decided. I'm going to somehow create a large enough net worth that I'm going to be a lender, because those banks, they have it down pat. They have it down pat. I'm going to be a lender. So where do you usually, just for us to wrap up here, where do people usually come to you from? Like when they reach out, like what part of their lives are they usually at? Or like where do they usually come from?
Yeah. So right now we've seen in 2025 a big influx of business sales, right? So tech companies and another like private jet company. We've seen automotive, dental practices. So these are business owners selling a business, okay, or portion of their business. That was big for 2025. Prior in 2024 was an odd year. Prior, and then in 2021, 2022, 2023, like it was mostly real estate. And so real estate has slowed quite a bit. And then we've mixed some Bitcoin and some cryptocurrency in there as well. We're the first to ever do it with Bitcoin, about a $5 million Bitcoin exit, which was awesome. For a client, cool story. She worked for Google and bought Bitcoin at a very low valuation, and it skyrocketed, and we were able to exit a large portion of that and for the tax, and then use that capital to start up a business, and all tax deferred to start a business, kind of like a self-directed IRA, pretty cool. And then diversify and get some cash flow coming in for living expenses. And so that's the beauty of this. And I would say they really find me when they're exiting a business, right? When they want to exit Bitcoin without moving to Puerto Rico, when they're tired of the 1031 in their real estate and they're ready to defer the tax. Those are the three major ones that people find us, and they find us on podcasts. They find us from the book and us speaking. When I speak at conferences and stuff, that's kind of the main spots.
No, I love that. And I think the biggest problem that people end up having is that they get paralyzed and then they do nothing. And then all your money goes to the government, like we talked about earlier. So if you are exiting something and you're having a ton of capital from it, I think that doing some research, figuring out who you're going to talk to make a plan is so important. So then people can find you. You have all the social media platforms, which is absolutely amazing. I'm sure if we Google your name, you're just going to pop up all over the place. But what's your favorite place for people to reach out to you and for people to find information about?
All the things, yeah. So Building a Capital Gains Tax Exit Plan is the book we have on Amazon. You can check that out. Best-selling book with Kevin Harrington from Shark Tank. Pretty cool. And then capitalgainstaxsolutions.com. If you have a live deal and you're like, hey, I just want to see if this could be a fit for me. We have no cost, no obligation call, as long as you have like at least $1 million deal that you're exiting. And it's subject to U.S. capital gains tax. Again, very clear on that. You don't have any strategy for outside of the U.S. You could be a non-U.S. citizen who owns assets in the U.S. subject to U.S. capital gains tax, then we can definitely help you. But just keeping that in mind, you can go to the website and then, you can search my name, Brett Swarts or BrettSwarts.com, and LinkedIn, Facebook, Instagram, all those places, all connected there.
Perfect. And then I'll actually put the Amazon link in the show notes for everybody too, because I think information is so powerful. Not enough people have the information that they need in order to get where they're going. And so many people are retiring poor and don't realize all the nuances of being able to invest and like how to keep more money in your pocket at the end of the day. So I'm going to do that in the show notes. And Brett, thank you so much for coming on the podcast today. This was really good information. And I just want people to be able to do better for themselves and have the information. So thank you so much.
Grateful to be here. Thanks for having me.
That's a wrap on this episode of Real Estate Real Talk. Whether you're an agent building your business or a buyer or seller trying to get the real story, thanks for being here. If this episode gave you clarity, confidence, or just something to talk about, I'd love for you to follow, rate, and share the show. It helps more people find these conversations. If you have questions or want to connect, head over to SkyleighMcCallum.com or come hang out with me on Instagram. Thanks for listening, and I hope you catch the next episode on Real Estate Real Talk.